Hello everyone, and welcome back to our channel where we discuss everything that is to do with ACCA, career, finance and accounting, etc. etc. I'm your host Zaid Syed. I'm an ACCA member. If this is your first video on our channel and if you'd like to know more about me, please visit the video in the link where you will get to see or hear my bio. Coming to today's topic, since I have been teaching audit for quite some time, very often I've seen students having problems with the questions around the audit risk. Now, this is something not only the students that I have taught, but also the students that I see and hear on the various forums. Especially when you look at the examiner's report, and I think this is something that constantly comes up as one of the key problems in the audit paper, is that students are unable to identify what is an audit risk, and more often the answers move towards a business risk, which is something obviously completely wrong as far as the examiner's requirements are concerned. So very quickly today, because my agenda is always to make sure that we keep our videos short and crisp. So today I'd like to talk about what exactly is the audit risk. So first and foremost, very simple, audit risk is the risk for an auditor to give an incorrect opinion. Now, I know a lot of people, as soon as you ask them about what is audit risk, straight away it comes to inherent risk, control risk, detection risk. But those are all the sub parts of what audit risk is all about, and how audit risk is formed. Your audit risk, in a crux, in a nutshell, is that auditor may give an incorrect opinion. Now, if you stick to this, I think your understanding of why we constantly go wrong in answering the audit risk question, you should be able to understand. Because you giving an incorrect opinion is the problem here. So therefore, if I look at a scenario, right, and let's say one of the most common examples that students really falter is let's say one of the customers who's got a material receivable balance that goes bad, or you see in the scenario that there are all the signals given that this customer will turn bad. Now, the requirement obviously is to find out what audit risk, but often students will start to talk about, oh, if the customer does not pay, this is a material customer, the money will not come in, there will be cash flow shortages, and then there will be business problems, the business will not be able to last very long, etc., etc. And sometimes you may even go to the going concern challenges. Of course, when there is a proper going concern challenge, then yes, you should talk about it, and I will also give an example where and what you do in a going concern situation. But this scenario, if it's one customer who has a material balance and has a potential of becoming bad, the audit risk here is that the receivables are overstated, right? And if the receivables are overstated, and if the auditor is not able to get that corrected, or gives an opinion that everything is true and fair despite the receivable being overstated, now that is an incorrect opinion, right? So now I hope you are trying to maybe map, oh, okay, fair enough, right? Because risk is giving an incorrect opinion. Now the scenario is where the balances may be overstated, and if you do say yes, everything is fine in the receivable, you've given an incorrect opinion, right? Let's say there is another scenario, right, where the assets or inventory, another one, where constantly students mess up or go wrong, is the inventory is there and has been around for a long time, and the business is slow, right? Now again, the requirement is identify the risk here. Now, as soon as you see that the inventory has been lying around, or the business is slow, straight away the students will go to the business risk. The business risk, of course, is that if the inventory is not sold off, the business will not run, they will not make money, they will have cash flow problems, etc., etc. And again, as I said, you can map it to, say, an eventual going concern problem. But here, if there is an inventory, and if it is not something which is going to impact the full business, but yeah, it is still material, here the audit risk is again going towards, if the inventory is not being sold and it is obsolete, then that means the inventory should have been written down, because it is in almost all likelihood the inventory is at cost, whereas the rule is, it should be either the lower of cost or the net realizable value. So you have to write down the inventory, and if that has not happened and the auditor says that everything is true and fair, right, then again you have given an incorrect opinion, right? So I'm sure by now, if you did not understand the first example, but now you are definitely understanding that yes, the audit risk is of course key. If you're not able to sell the inventory, the money will not come in, there will be workflow, cash flow issues, and then you may eventually start to look at shutting down the business. But in the immediate scenario, because you're looking at auditor's current opinion, the current opinion is that if the inventory is not written down to NRV, then, and the auditor has given an opinion that everything is true and fair, then there is an incorrect opinion, right? So guys, for every scenario, so if I ask my students, how do you approach a question like this? So whenever there is an audit risk requirement, always try to, first of all, audit is all about making sure you follow a method, right? There needs to be some format, needs to be some standard, because audit being all completely subjective, there is so much to write and there's so much to explain that you will probably get lost, and then you may not even complete the full paper, right? So therefore, follow a format, right? And I will be doing more videos around what this format is in each of these areas. But let's say in audit risk, always try to figure out which part of the balance sheet is impacted, right? In the first scenario, there were receivables that was impacted. In the second scenario, there was inventory that was impacted. So identify, what is that area of the financials which is impacted. Now, you need to explain what assertion or which assertion is impacted. Now, assertions, I hope to make another video on assertions, but basically, these are the characteristics which are at the highest risk for a given balance, right? So let's say for receivable, it was, the value, the value of the receivable is not correct, or the inventory value is not correct, right? So you should mention that, the valuation may not be correct or will not be correct if this is not, rectified, right? And then mention the third aspect. This will result into the balance being overstated or understated, right? So as long as you're following this, process, that identify which area of the financial is impacted, what assertion is impacted, and how does this impact on the financials balance? Is it going to be overstated or understated? Because remember, in the exam, when you have to identify an audit risk, let's say the audit risk identification is, say, a mark and a half or 2 marks, right? So you will get marks half for each of these bits that you identify, right? So as long as you've followed this format, now again, if you are following Kaplan or BPP, you will see that the answers usually follow this flow, right? So if you stick to that flow, you will find yourself to be getting the maximum marks available. Because audit, often students will come to me, oh, we did the paper brilliantly, and we've put in so many things in the paper, I don't think so I've left anything behind. But still the marks will not be satisfactory. And the problem here is that you've not really written about the requirement, but whatever you thought was to be written there, right? So nevertheless, I hope this video has helped you understand the audit risk, and how do you identify, and what do you do when you've identified, and the structure to follow for the audit risk. Now, I did mention that I will talk about the going concern. Yes, if there is a significant, like in the reporting chapter, you must have seen that if there is a pervasive issue, right, then of course you will need to mention that if the financials are not made in line with how they are supposed to be, because the issue is so material that there is a going concern problem, then of course there will be lots of items which will be overstated, there will be a lot of items which will be understated, right? So if there is a going concern issue and you can find that out because of the nature of the problem being pervasive, right, it is spread across the financials, then yes, there could be a going concern issue, and then you will talk about why there could be overstated or understatement of the numbers over there, right? So I hope you've enjoyed the session, and if you have, do please share it with your friends and family who you think can benefit. Audit risk is something which any accountancy student will have to work on these concepts by whether you are ACCA or your CA or your CPA, right? So I hope more and more of you guys take benefit of this video. If you do want me to do such more videos, please feel free to write to me in the comment section, or do let us know in whatever way. And yes, if you've liked the video, please press the like button, do share it, and do subscribe to our channel. Thank you so much.